Yo, what? Mic check, mic check. Hope you guys are doing well. Now that the mic is working, you guys gonna, as I said, hear more from me. As you can see, the market's going down a bit. I've been meaning to make this on the weekend, but today's gonna be really quick, short. It's gonna be about the banks, my thought process on it. This is not investment advice. I gotta put that in a disclaimer somehow before the video starts. But just to get a perspective or give perspective, because a lot of people are talking what happened, why it happened, and things of that nature. The long story short, from my understanding point of view, is the Silicon Valley Bank was a bank that gave money to private investment firms. So often they're high cash burning companies, but the biggest issue why they had trouble, and the reason why I'm making this video, is the balance sheet looked great, which is a bit scary, which is why we are seeing some sort of a market reaction. Why was the balance sheet great, and how did they go from making 300 mil to going bankrupt? It was worth they had 16 billion assets. The reason for that is they had purchased long-term bonds, and that long-term bond, given what happened with the bonds market, they had, I think they had like 8, 10, 12, a lot, like massive billions of dollars unrealized. I think it was either 8 to 12 billion, but don't quote me on it, but it's something very big. So, but in the balance sheet, in the accounting perspective, what they had done is they're like, well, we're holding these bonds to maturity, so the way we're going to account for it is basically not based on current market conditions, on the conditions that it's going to expire, and basically at the value of whatever it will expire at. Because if they held to the maturity, there would not have been any issues, or minimal issues. So that's why we're seeing, I think, a big gap down in FRC, in WAL, and that's why the market's having a bit of a scare. What does that mean? I'm outside of USA, but what does that mean? I think the smaller banks, again, this is not investment advice. I'm not saying to do X, Y, and Z, but for the guys that are in the market and the guys that are keeping an eye, just watch out for. The smaller banks may be in trouble, because a lot of the banks, what they do is, in order to protect their liquidity, they buy long-term bonds. When you have a long-term bond, and because the bonds had a big fluctuations recently, they would have unrealized loss in their balance sheet. But if you hold until the end date, it's not a big deal. But if there's a run on the bank, like everybody comes in to take out the money, then it becomes a problem, and there's a chance you could go bankrupt, because if you're forced to sell it, you're going to be forced to sell it at a loss. It's liquidity issues is the issue, what's happening. And then today, the government announced that they're going to give a 1-year loan for liquidity issues and this and that. There's going to be no bailout. So that's what's going on. Be safe. Don't take any crazy actions. How I'm going to personally be trading it, I like when there's fear and things driven. So if I were to take some risky actions myself, I almost want to be like, check out the next video and you find out. I'm not going to be that sleazy yet. No, personally, I think I'm going to, if I were to take some risky positions, it would be through options, out of the money call, and some things that would supposedly to go bankrupt. And what I'm watching out for is basically what I mentioned. Do they have unrealized gains or losses, unrealized losses in their balance sheet. That's all. Have a wonderful day. Be safe, amigos. And yeah, just be careful with your real life money if you're in the small bank in USA, private. So, ciao. Hey, if you made it this far, subscribe. That means you liked it.